Yet another video about dividend stocks. As we enter a recession, if you're watching this in the summer of 2022, all stocks have taken a hit, but you're still interested in investing because you should invest regardless of what the market is doing. If stocks are dropping, you're just buying something at a discount. And if you're buying dividend stocks, you're getting paid monthly or quarterly while you wait for the world to recover. Before I get into it, if you're a beginner Canadian investor and you're looking for tips and tricks or just starting points, I've created a small free ebook to give you some guidance. I'll leave a link. All you have to do is sign up with your email. Now, I'll be briefly breaking down the top 4 Canadian dividend stocks with the longest growth streaks. Not just streak of paying a dividend, but a streak of increasing their dividends. If you were earning $1,000 in dividends 10 years ago, that's great. But as inflation reduces the value of that $1,000, ideally you'd want an investment that increases in value over time. So that $1,000 annually turns into $1,100 or turns into $1,200 over time. That's why we look for dividend growth and not just dividends. Up first is Canadian Utilities, ticker symbol CU on the TSX, currently trading at $40.32 and paying a quarterly dividend with an annual yield of 4.41%. I know these dividends I'm recommending have a yield currently under inflation, but at 8 or 9% inflation, it's hard to find a safe and stable investment that can beat that. So we'll just have to hope for capital appreciation, dividend growth, and for inflation to decrease. Canadian Utilities has the longest dividend growth streak of any company in Canada with a very healthy 50 years of consecutive growth. While you'll be earning 4.41% now, hopefully next year it'll be 4.7 and then 5.1 and continue to increase until you decide to sell. This is considered a safe or defensive stock. That means it grows at a slower pace than the rest of the market or like tech sectors, but on the flip side, it also decreases at a slower pace. If we take a look at the stock in 2022, year to date, it's actually gone up in price. As people fear a recession, they sell the risky investments and they flock to the safe ones, CU being one of them. The only way to know if a 10% increase is considered good is to compare it against the market. If we look at the entire Toronto Stock Exchange, it is down 13% this year. If we look at the S&P 500, the largest 500 companies in the US, they're down almost 20% this year. So not only would we have been earning a safe and increasing dividend, but you'd get some capital appreciation while you wait. Next on the list is Fortis, another energy and utility company. If you've watched all my videos, all 225, I believe, you're probably annoyed right now because I've been recommending Fortis at least twice a year. So I won't spend too much time breaking it down, but I keep recommending it because it's such a good investment in my opinion. Ticker symbol FTS on the TSX, currently trading at $61.28 per share. They pay a quarterly dividend with an annual yield of 3.49%. So you'll get 4 payments totaling 3.49%, not 3.49% every quarter, so 4 times a year. Hopefully that makes sense. They're currently the second longest dividend growth company in Canada at 48 years. They've been increasing their dividends for 48 years straight, not just paying them. If we look at the year-to-date price, they're only up 1%. In 2022, which is much less than Canadian Utilities, but still outperforming the overall TSX, which is down 13%, and outperforming the S&P 500, which is down almost 20%. If we look at a longer time frame over the last 5 years, the stock has actually increased 36% compared to the TSX at a 21% gain. So you're not just getting increasing dividends, but you're getting capital appreciation as well, which is always nice. Last on the list is Toromont Industries, making its debut on the channel. To be honest, while researching, I've never heard of the stock before, but they have the 3rd longest Canadian dividend growth streak at 32 years, so they have to be included on this list. Another confession, I'm actually on the fence about whether I'd invest in this or not. The dividend is the lowest on the list at 1.5% annually, and their year-to-date performance has suffered greatly, losing 12% in stock price. They're currently trading at $99.44 per share on the TSX. The ticker symbol is TIH. So while trying to find something or some redeeming qualities, they're up over 112% over the last 5 years, which is obviously impressive, almost tripling the performance of the overall TSX. I would definitely recommend investing, and I have invested in the first 2 stocks, CU and FTS, but I personally wouldn't recommend investing this for my own portfolio. If you're looking for dividend growth streaks, then this one should be on your list. But if you want a mix of slightly higher dividends plus growth streaks, then currently at 1.5%, that's not enticing at all. I would probably watch this stock and wait for a price drop. The price has to go down enough so that the annual yield becomes enticing, maybe at 3%. That's it for this video. Again, if you're looking for beginner Canadian finance or investing tips, sign up for my free ebook. Let me know if you have any questions or topic ideas. I'll try to release 1 or 2 stock recommendations per month. If you notice, I haven't been recommending anything over the last 3 months because, to be honest, I'm worried about people losing money. I know that recessions happen, stocks go up and go down, but I would hate recommending stocks right now at the peak and have all my viewers sitting on big losses for a few years or maybe a few months. Anyway, thanks for watching and tune into the next one.